Hi guys, hi from Andrea Unger. Today I would like to discuss a bit about historical data. Historical data question I often answer is how back, how far back in history should historical data be to test effectively a market, and what time frame should the definition be to get a clear picture of the market. So this depends on the instruments you intend to trade. Let's start, for example, on index futures, DAX future or mini S&P, whatever. Here, the point is that you should go back enough to cover different market scenarios. If you have data starting from, for example, 2012, you won't get a clear picture because after that date, markets had more or less a common uptrend behavior, also some years before. So you will develop on markets with a strong directional bias, and this can obviously produce strategies that might not be effective when things change. We know what happened in the index futures in 2008, so it should be at least recommended to cover also that strong downtrend year, such as 2008, to have a clear picture of trend and volatility in these markets. Also, 2001, 2002 showed a strong downtrend, and then this means it could be good to have a look at what happened then. But those years and that kind of downtrend had a smaller algorithmic presence of the market, and the dynamics of the moves were a bit different, which does not mean what worked then is not working today, but referring to those moves is not so important as it could be, for example, to refer to 2008 to have an idea of what happens when markets really fall down in a violent mode. So 2006 could be a good compromise on index futures. And a time frame, if you can get down to 5-minute time frame, is good. Smaller than that, really, I don't think it's necessary. 1 minute or tick data, which are, by the way, very expensive, that's not something that really is needed for us. And if you plan to develop off tick data, then you probably should even need an infrastructure, technical infrastructure, to trade at that definition. And normally retail traders, as we are, don't need and don't have that kind of hardware and connectivity and so on. So actually 5 minutes is enough to clearly define how the moves look like and therefore what kind of action to take. Going to commodities, crude oil, gold, soybeans, whatever. Okay, I would say that if we start with data from 2010, it's good enough. Before that, there were data, 2008, 2009, but the electronic markets on these futures were newly born, and the initial moves were not so clear as needed to trade and to develop effectively what we want to use today. So in those cases, I believe that having data going back to 2010 is absolutely satisfactory to have a good database. On currency futures or on Forex, it would not be bad to go back to 2003 at least. Also starting from 2008 or on, you can have something, but back to 2003 is not that bad, because I noticed that from time to time some dynamics seen in some periods of the past come back and are shown again of the market. So if you can go that back, it's not bad. If you refer to Forex instead of currency futures, be careful about the source of the data, because you know it's an OTC market, so everybody has its own data, let's say, and it's important to develop on data you are then most probably trading once you go live. So this is more or less the picture. On On grains, I forgot, be careful because the sessions changed from time to time during the year, so this is important when you set it up for backtesting. On bonds, I don't think many people are that interested in bonds, but on bonds also what was valid for indexes might be valid for bonds as well. This is more or less the picture. Obviously, the higher quality of data you gather, the higher the quality also of the software you use to backtest on the data must be. I mean, if you get thick data for thousands of dollars and then you use a small hand calculator to develop, obviously you don't have a good compromise. So the higher the quality of the data you focus on, the higher the quality of the software you use to picture your strategy must obviously be. This is something you have to keep in mind when you try to structure your backtesting environment. That's it. I hope it was useful. In any case, ask questions here below and in the comments. I will be glad to answer, and see you next time. Ciao from Andrea Unger. Enjoyed it? Click the link below and you will be noticed as soon as new material is available.